Hey, thank you for joining us. Another episode of Jones Insurance. Again, my name is Mike Jones. This is our office manager, Beth Klein. And today we're going to discuss a little bit about homeowners insurance. If you own a home or something like that, you're probably a little bit familiar with homeowners insurance, but we do want to touch on it. Of course, if you've got a mortgage, generally your mortgage company is going to require you to have insurance coverage on it. If you don't have insurance coverage, they will more than likely contract to ensure that there is coverage on the house, and that might not be the best rate that you can get. So we highly encourage you to maybe do a little shopping around and definitely check with us here at Jones Insurance about your homeowners insurance. So but if you don't have a mortgage, it's up to you whether you get coverage or not. But I would say that if you're not covered, you're probably risking what's probably one of your biggest assets that most people have is their home. Yes. And so I don't know if you want to take on such a liability that way and all. Mm-hmm. Beth, what you want to share your thoughts with us on homeowners insurance?
Yes, so I always definitely recommend having homeowners insurance just because, as Mike said, that is your biggest asset. That's where you put your head at night to rest, so it's definitely important to keep that covered and keep that protected. And obviously there are different types of homeowners insurances that I don't think a lot of people really know. There's anything from like what they call HO1 to HO8. Then there's also DP, which is dwelling insurance. And dwelling insurance is similar to homeowners, but there's obviously a huge difference. A few things where your homeowners is going to cover a whole lot more than the dwelling. Dwelling's not going to protect you from theft. It's not going to protect from like weight of ice and snow. I would only suggest dwelling really if you're a landlord and you're renting it out, because it's not going to protect the contents of your home. So it really is up to you and what your needs are, but I always suggest an actual homeowner's policy if that's where you're staying full time. It's definitely important for sure.
Yep. And we can help cover any of those types of insurance that you might would need, whether you're the homeowner or like Beth said, if you're the homeowner but you're renting it out, so it's a rental property, we can help you with those. But we highly encourage you to make sure that you've got coverage on the dwelling, whether it's rental, whether it's your home, or condominium coverage,
yes,
townhomes, any of that type of stuff, to ensure that you're what for most people anyway is going to be your biggest asset, that you've got an appropriate amount of coverage on it. And you want to be careful to make sure that you do have enough coverage, so if something does happen to it, that you can replace it.
Yes.
And you also have to think about what's going to happen to you in the in between time between getting it either rebuilt or repaired, or depending on what happens to it, to make sure that you've got a way to fix it or rebuild it. But also there's some coverages to where if you need a place to stay during that time, to make sure that you're covered for that while it's being either repaired or rebuilt. So there's things to look at for those types of things. And then things to consider as far as, the deductible, how much are you capable or willing to pay out of pocket before the insurance pays. Definitely want to insure against a catastrophic loss, so losing the entire thing or a large portion of it. But there's other repairs and things like that that may happen, that may not be as significant, that you would want to, some of it you may be able to cover out of pocket, and then have insurance pick up after that. So depending on what your deductible is, what you feel like you could cover, that also helps with the premium and how much it costs. couple different things about the premium. If you know, a lot of times we get some people that are capable of paying the policy in full for a year, maybe. Many times there's a savings if you can do that. Other times it's a down payment and then a monthly payment to be able to pay it off, or to be able to pay that insurance premium over a period of time. Some other things to look at are, you know, if you're in a floodplain zone,
Yes.
that kind of thing. Earthquake insurance.
Yes.
We offer all of that kind of stuff here, but those are things to consider depending on where you're at. We're fortunate enough to insure some of our clients along the coast here in South Carolina and North Carolina. And so in the event of a hurricane or something like that, or some type of flooding or anything like that, you know, you want to make sure you've got that type of coverage. Midlands of South Carolina here in the last couple of years have had probably a record number of earthquakes.
Yes.
Yeah. And so we've seen a rise in that type of coverage, people wanting that. And so a lot of things go into protecting your home or protecting an investment property that you may have. And you know, if it's an investment property or your home, either way, it's a significant investment, and you just want to make sure that you've got good coverage to make sure that you're looked out for. And if it's an investment property, you know, you may want to make sure that the people that are living inside that are renting from you have some type of a renter's policy. You know, we do renter's policy here. It helps to cover the renter's contents or their personal belongings, that kind of stuff, so that you know, would not necessarily be covered by a dwelling policy.
And then I also just wanted to kind of add on to like the earthquake coverage and the flooding coverage that you were talking about. Those aren't automatically built in to your homeowner's policy. The earthquake coverage would be what's considered an endorsement, so it's an add-on.
Yep.
It's something you would have to ask for, and there's also like an additional, it's a very small, but an additional charge for that. But say you don't have that coverage and we have a huge earthquake and a bunch of damage happens, then the insurance wouldn't pay any type of payment for the damage. And also with the flood, I don't know if you remember, but our 1,000-year flood that we had,
Yeah.
that was crazy. But South Carolina experienced a what's called our 1,000-year flood. We got, what was it? I think it was like a third of rainfall that we usually get for the year. We got it in 5 days, 4 days.
Just a few days.
Yeah, it caused, I think it was reported like almost $1.5 billion of damages across the state. And flood insurance is it's a different coverage altogether, which we can get into later, but it's not a part of your homeowner's policy. And a lot of people, I think, then kind of learned that. Yeah, they thought that they had coverage. They thought that they could get protection and kind of rebuild their home, and come to find out they had to pay for it out of pocket completely because it's not covered under homeowners. So it's definitely, you want to review your coverages and figure out what you need. You know, like if you're living along the coast, if you're living at the lake, you definitely want to look to see if you qualify for flood coverage and see if that's an additional policy that you'll need for sure.
Yeah.
Mm-hmm.
And so what happens with the flood and that, what do we call it, 1,000-year flood
yeah.
or whatever it was? I think it was Hurricane Joaquin, I think, was off the coast,
Mm-hmm.
and it just sat there for a long period
did.
of time, and a lot of rain poured down.
Mm-hmm.
But after that, I don't know exactly who updates the flood maps.
I don't remember.
But anyway, I know in South Carolina they significantly got updated at the time, and it's easy enough to check to see if you're in a floodplain or something like that. If you're in a floodplain and you have a mortgage, most of the time the mortgage company is going to require you to have flood insurance. But like Beth said, it's not that much of an additional premium, especially if you're in or very close to a floodplain, to be able to add. And with the increased number of earthquakes, you know, in the Midlands of South Carolina and around surrounding areas, it may be a good idea to look at adding that.
Mm-hmm.
And normally when we talk to our clients, we try and talk to them and find out, where they're at and maybe some of their concerns, and just to try and make sure we've got some of those coverages for them, or at least offer them to them if it's something that they don't necessarily have to have, but if they realize, hey, I'm along the coast and I don't have a mortgage, but maybe you still need the insurance if you want to protect the asset.
Yes, for sure.
Today, what we're going to talk to you a little bit about too is interest rates and kind of what's going on in the market today. I know inflation has been a big topic, and we're looking at how to handle that. And so interest rates is one of those topics that everybody kind of, it's big to everybody. It drives a lot, drives how the economy's going, how free the money is, and that kind of thing. So we just kind of wanted to touch on it a little bit today.
I just know from like personal experience, my husband and I, we bought our house like literally a month before COVID happened and shut down everything, and luckily we were able to get a pretty decent interest rate for what we had going on. And then about 4 months later, we were referring my brother-in-law and his family to the same mortgage company that helped us out, and it was unreal at the difference of the interest rates. It was almost doubled what it was just in that little bit of time. So it's definitely a struggle for sure now. Good credit always helps. And as we discussed in our last video, those different things to try and help. But credit and just making sure you have that nest egg, is really, really a big thing.
For sure.
Mm-hmm.
Yeah, mortgage rates have doubled since 2022. We're only in the middle of 2023 right now. If anybody got their interest rates in at around that 3% or lower, they're probably wanting to hang on to that if at all possible. And banks right now aren't really doing a whole lot of cash out. So being able to get cash and refinance it, a lot of them have been a little skeptical to do some of that. Maybe it's loosening back up. But the Fed chair, Chairman Powell, recently told Congress that the U.S. inflation was well above target, and most interest rates are likely this year, although he didn't shed light on the time, but they're probably going to go up again. So it'd be more interest rate hikes. I think he talked about nearly all of the Federal Open Market Committee participants expect that the appropriate rate increase is somewhat further into the end of the year, but definitely looking at making another increase. They released forecast updates that they're thinking 2 more 25 basis points rate hikes before the end of the year. So that would bring the Fed's benchmark rate somewhere between 5.5 to 5.75. So continued increase in that. But of course, the last meeting, they didn't raise interest rates, which was the first time in 15 months that they've met that they didn't raise interest rates. And so for the most part, rates are somewhere between the 5 and 5.25%. And but as they meet next month, there's more and more talk that they're probably going to raise interest rates again. So we'll have to see how that plays itself out. Chairman Powell also said that the economy slowed significantly last year, and the most recent indicators suggest this activity is expanding and at a modest rate. So it's not slowing fast enough. So what they do is they raise the interest rates in a hope that we slow the economy down a little bit. And he talked a little bit about jobs also, and he said that the labor market remains very tight, was his wording for it, with the average of 314,000 jobs added to the economy each month so far this year. So, and he said that there were some signs of cooling in the job market, and Powell suggested that a strong job market won't last with inflation so high. So he expects the job market to potentially fall off, and so things may get a little bit worse before they get better from some of that news. And he did talk a little bit about the banking system. I know we've had some banks have some issues in recent months, but he said that the U.S. banking system is sound and resilient. He said that despite the collapse of the Silicon Valley Bank and 2 other mid-sized regional banks this past spring, so he said the bank stress caused by the failures have highlighted the importance of ensuring we have the appropriate rules and supervisory practice for banks of this size. And he said we are committed to addressing these vulnerabilities to make for a stronger and resilient banking system. So they're doing what they can. Hopefully they're doing the right thing to be able to curb inflation. I know most of us are feeling it at the tank and at the grocery store pretty heavily right now. So, nobody's immune to those increases, like I said, at the pump or the grocery store. So, anything else you got to add on that?
I was just gonna add a funny story. When the banks closed and everything, my husband, I always pick on him and say he's one of the aluminum hat wearers. When the banks closed, he pulled his paycheck out of the bank and was hiding it and stuff. I'm like, what are you gonna do? I was afraid I was gonna look out in the yard that night and see him digging a hole.
Yeah. Burying it, kind of.
Burying it, yes. It was funny.
Well, the good thing is, as long as you have your money in a FDIC insured bank, your deposit's covered, and you should be able to recover that money and stuff like that. So just make sure that either a insured bank or credit union, and most of your deposits you'll be able to get back as long as it's $250,000 deposit, $225,000,
something like that.
I'll look that up. You'll edit that and get that one in there. How about that? Let me look that one up, because there is a limit to the FDIC. $250.
Okay.
The standard deposit insurance covered limit is $250 per depositor per FDIC insured bank per ownership category. Of a revocable trust account, including living trust and informal revocable trust, commonly referred to as payable on death (POD) accounts, with one owner naming 3 unique beneficiaries, can be insured for up to $750,000.
Oh wow! Okay.
So basically, each named insured on that gets covered, but it's $250,000 per depositor. So if you got a joint account, it's $500,000. If you have something like that trust, is what it said, and this is the FDIC website. But it talks about if you have a trust and you've got three payees, paid on death beneficiaries, it could insure it up to $250 per. So times 3, that's $750,000.
That's impressive.
Yeah.
So when you say joint account, does that include one person having multiple accounts, or does it have to be another person on there?
Well, so a joint account, it'd be another person. So me and my wife on an account,
Yeah.
you and Jeremy on an account or something like that. Y'all would be insured for up to $500,000.
Okay. So right now we have separate accounts.
Okay.
So
Each one of you's covered $250 on each account.
But I have other accounts set up for my kids. So
Yep.
would that count as well? So $250 for each of those.
Yep. So do you have the account in your name and their name?
No, it's just my name.
Just your name with them as a beneficiary, maybe?
Essentially, yeah.
We would have to check on that one.
Okay.
But if they're not named on it, it may only still be $250.
Okay.
But if you had it at a different bank,
Oh,
So like I've got accounts at maybe a different bank or something like that, so
it would account.
my primary account,
Okay.
and then, you know, I got a credit union or two that we've got some accounts at and things like that, but each one of those would be insured for $250,000.
Okay, cool.
So I guess if you've got more than 250 and you're the sole person on it, just open another account in another
Okay.
bank and you're covered for another 250.
Okay.
Be an easy way to handle it, I guess, right?
Yeah.
Or joint account covered up to 500,000.
Right.
Yeah. All right. So just a little bit about the interest rates right now and what the forecast looks to be like. But if you've got the lower interest rate like right now, like I'd say probably almost 4.5, anything that or below, you know, unless you absolutely have to refinance it, you'd probably be better off to keep the loan that you have.
Yes.
And you know, if you have to refinance, try to refinance at the 5 to 6% or 6.5%, wherever your refinance rate. Use that money to pay off a high yield credit card or some other debt that you've got, so that you've got a less interest that you're paying.
Yes.
Because the higher interest rates are what gets you in the long run.
And last time I looked at a credit card, it was like 24, 25%.
Some of them are 20-24%. You know, that kind of stuff. So you want to be careful about those kind. If you've got a little bit better credit rating or something like that, and you can get there's still some 9.5% interest rate credit cards out there. If you've got really good credit and stuff like that, they so save you some interest rates on it.
Right.
And of course, if you can pay it off at the end by the end of the month, you're probably a lot better off instead of paying any interest, right? So, all right. So hit us up if you got any questions about interest rates or anything like that. But continue to follow and share and like our page. And you know, this is Jones Insurance. We're primarily a AAA carrier, but we do have some other carriers to be able to help you with your personal lines of insurance, which would be your auto, home. We also carry business lines of insurance, so we can help you there, and we do some commercial insurance. So if you've got some insurance needs, give us a call. We'll see how we can help you. But again, please like, share, and subscribe to our page, and visit some of our other companies. Again, me and my wife own Jones Insurance Agency. We've got Freedom First Outfitters, store in Camden, South Carolina, and also on the web at www.freedomfirstoutfitters.com. And we also have a real estate company, America United Real Estate. So you can find us on the web there also. But thank you for watching our podcast today.